AI, it's everywhere, right? It's not just a buzzword anymore.
Definitely not. It feels like it's changing how we do, like, well, everything.
Exactly. And that brings us to today's deep dive. We're going to look at some potential investment opportunities. And, well, these are right at the heart of this whole AI boom.
We're going to be diving into a report from the Motley Fool. They've highlighted 3 companies they consider to be raging buys right now.
Yeah.
All 3 of these companies are closely tied to Nvidia, a real powerhouse in AI.
And you know what's interesting? These aren't companies with sky-high stock prices right now. We're talking GE Healthcare, nVent Electric, and Vertiv. As of, let's see, the end of March 2025, their stock prices are down anywhere from 13% to, get this, 41% from their all-time highs.
Yeah, so our goal here is to figure out what's the connection these companies have with Nvidia, and why is the Motley Fool so bullish on them as investments, even though their stock prices have taken a hit.
And for you listening, think of this as a shortcut. We're doing the digging, pulling out the key points so you can see the big picture without getting lost in the weeds.
Exactly. We want to make sure you're walking away with those aha moments and without taking up your whole day.
So first up, GE Healthcare Technologies, ticker symbol GEHC. Most people know GE, but GE Healthcare. They're specifically focused on, well, healthcare technology.
Yeah, and their link to NVIDIA is all about something they call advancing innovation in autonomous imaging.
That's pretty futuristic, right?
It does. We're talking more than just your average X-ray, I guess.
Right. What we're looking at is GE Healthcare's expertise in medical imaging, think MRI machines, CT scanners, and combining that with, well, NVIDIA's AI prowess.
Okay, so what does that look like in practice?
Well, the Motley Fool talked about how they're using these really sophisticated algorithms, deep learning stuff, to analyze medical images. The idea is to find patterns that honestly might be too subtle for even a trained doctor to always catch. It's not just making the images prettier, it's about finding those early warning signs, potentially spotting diseases way sooner than we do now. So it's not just about having the fanciest equipment, it's about using AI to potentially change how we diagnose and treat diseases. Pretty big implications there.
Huge. When doctors have this kind of detailed information, the kind of insights AI can provide, they can make much better decisions, more accurate diagnoses, faster treatment, and hopefully better outcomes for patients overall. And this isn't just like a small tweak to existing systems. The AI integration is meant to really bump up the value of GE Healthcare's imaging equipment. Even their imaging agents, those pharmaceutical products that help doctors see what's going on inside the body during scans, are becoming more valuable thanks to AI.
Right, because if the AI can give you more useful information from those scans, then the whole package becomes more appealing to healthcare providers.
Exactly. And speaking of useful information, the Motley Fool pointed out that GE Healthcare has been racking up FDA approvals for AI-powered medical devices. They went from 58 approvals in 2023 to 85 in 2024.
Wow, that's a pretty big jump.
Yeah, it definitely shows that they're serious about this AI integration. Now, it's not all sunshine and roses. The Motley Fool article did mention they've hit a bit of a snag, particularly with weaker demand in China. That's been a drag on their growth lately.
Makes sense. Global economics can really throw a wrench in things. So where does that leave them in terms of valuation?
Well, right now, GE Healthcare is trading at something like 17.4 times its estimated earnings for 2025. Goldman Sachs, they're actually pretty optimistic. They think GE Healthcare will be back to that mid-single-digit revenue growth by 2026. So the argument here is that their current stock price, it might still be reflecting those recent challenges, those headwinds, and that could actually make it a good time to buy.
Especially considering their stock is still down 13% from its all-time high.
Right. So you've got a major player in healthcare tech actively using AI with a partner like Nvidia. And because of some bumps in the road, they might be undervalued right now.
Interesting. All right, let's switch gears to our next company, nVent Electric, ticker NVT. Now, when you think AI, this isn't the first name that pops into your head, right? They're mostly known for stuff like electrical protection and connection products. So how do they fit into this AI puzzle?
Well, that's where it gets interesting. nVent has been shifting its focus towards markets that are, well, booming. And one of their big targets is data centers and infrastructure. Think about it. No data centers, no AI revolution.
Makes sense. You need the hardware to run the software, right?
Exactly. And they've been making some big moves to stake their claim in that market. They recently bought Avail Infrastructure Solutions for like $975 million. That really boosts their presence in power utilities and, get this, data centers.
That's a serious investment. It sounds like they're not messing around with this new direction.
Nope. They're committed. And to really double down on this, Remember earlier this year when they sold off their thermal management business? That was a big deal, something like $1.7 billion.
Oh, yeah, yeah. So they're clearly putting their money where their mouth is, selling off old stuff, investing in the new.
Exactly. They're laser focused on those high growth areas, especially anything related to data processing and storage, the kind of stuff that's exploding thanks to AI. And their financials show it too. In 2024, about 20% of their revenue, roughly $600 million, came from their data solutions segment. And with this Avail acquisition, they're expecting to add another $375 million in revenue every year. That instantly makes them a much bigger player in the data center world.
So what are they actually selling to these data centers? It's not like they're building the AI chips themselves, are they?
No, but they provide all the behind-the-scenes stuff that keeps those massive data centers humming. We're talking cable management systems, got to keep all those wires organized. Racks and cabinets for the servers and all the equipment. Enclosures to protect the sensitive hardware. Power distribution units for reliable electricity. Leak detection systems, super important, with all the liquid cooling going on. And speaking of which, they also provide the liquid cooling solutions themselves.
Liquid cooling, yeah, that's a term we're hearing more and more these days, especially with how much heat all these powerful AI processors generate.
It's essential. Traditional air cooling just can't keep up with the demands of these new AI chips, especially the ones from Nvidia.
Ah, so that's the nVent connection.
Yep. nVent's liquid cooling systems, they're actually being used to keep those Nvidia-powered data centers running smoothly. Those AI processors, they generate a ton of heat. Without efficient cooling, they'd overheat and, well, things would grind to a halt.
So nVent is playing a crucial role, making sure the AI engines can keep running at full speed. That's pretty clever positioning. What about their valuation, though?
Well, at the moment, they're trading at about 19.2 times their estimated earnings for 2025. But that number drops to 17.3 times earnings in 2026. The Motley Fool sees a lot of long-term potential here, especially with the whole electrification of everything trend. We're talking way beyond just AI and data centers. It's about upgrading electrical infrastructure across the board.
Right, makes sense. And let's not forget, nVent stock has also dipped quite a bit. It's down about 32% from its highest point.
Yep. So similar to GE Healthcare, the argument is that this price drop might be an opportunity. They're a company that's strategically positioned in a market that's just going to keep growing, and they've got that direct link to a major player like Nvidia.
Interesting. Okay, on to our last company for today, Vertiv, ticker symbol VRT. And these guys seem even more directly involved in the whole data center world. They specialize in power and liquid cooling technology specifically for data centers.
Absolutely. So while nVent's providing more of the general infrastructure, Vertiv's really zeroed in on those mission-critical systems inside the data center itself. We're talking about the stuff that keeps those servers powered up and cooled down, and that's where their partnership with Nvidia comes in.
The Motley Fool even calls them a backdoor way to play the AI revolution. I like that. They're not building AI themselves, but they're the ones making sure the whole thing works.
Exactly. It's a different angle than GE Healthcare, who are putting AI directly into their medical devices, or nVent, who are supplying more of the general infrastructure. Vertiv's laser-focused on making sure the data centers that run all this AI stuff can actually function. It's a niche, but it's absolutely essential.
And the Motley Fool article mentions that they've been seeing some really strong growth recently. Sales, orders, backlog, everything's up. They even included this whole table showing year-over-year growth percentages. Like their orders were up a whopping 60% in Q1 2024, and they stayed pretty high for a while after that. Their backlog just kept growing, too, hitting like $7.4 billion in Q3 2024. Seems like they're in high demand.
Definitely. They're riding that wave of data center expansion, which is, well, fueled by the growth of AI and cloud computing. But here's the catch. The stock price has taken a bit of a nosedive lately.
Yeah, it's down about 20% since the beginning of the year and a full 41% from its all-time high. And it seems like the main culprit is that their year-over-year order growth was flat in Q4 2024. That could be a red flag for some investors.
It definitely raised some eyebrows. But the Motley Fool article also included Vertiv's explanation for this. They're saying it's not about demand drying up. They're blaming it on a slowdown in Europe, particularly around some regulatory issues that are making companies hesitant to place big orders.
So they're saying it's a temporary blip, not a sign of deeper problems.
That's their story, and if they're right, then this stock drop could actually be a really good buying opportunity.
Especially for those who believe in the long-term growth of the data center market.
Exactly. Now, of course, it's always important to do your own research before investing in anything. The Motley Fool makes a compelling case, but you've got to consider your own financial situation and how much risk you're comfortable with.
Couldn't agree more. Well, let's wrap things up with a quick recap. We've looked at 3 companies today: GE Healthcare, nVent Electric, and Vertiv. They're all tied to Nvidia, and they're all riding this AI wave in their own ways.
GE Healthcare is using AI to revolutionize medical imaging. nVent's providing the infrastructure to keep those data centers running. And Vertiv's making sure those data centers have the power and cooling they desperately need.
And here's the common thread. All 3 companies have seen their stock prices take a hit recently. The Motley Fool sees this as a buying opportunity. They're betting that these companies are going to be major players in the AI-powered future.
It's a reminder that this AI revolution, it's not just about lines of code. It's about entire industries adapting. And that creates opportunities for investors who are paying attention.
It really makes you think, what other ripple effects are we going to see from this AI boom? We've got healthcare being transformed, electrical grids needing massive upgrades, and this whole data center world exploding in size and complexity.
And it leaves us with a question for you, the listener. As AI becomes more and more ingrained in our lives, how do you think companies like these are going to be affected? What kind of long-term trends do you see emerging?
It's a fascinating landscape and one that's constantly evolving. Thanks for joining us for this deep dive, and until next time, keep exploring.